Hello, this is Lisa Sisko with the Lisa Sisko team. Thank you for joining us today for our real estate video blog, where we're going to answer a frequently asked question from Dale Knaus regarding what are the mortgage rates and options for buyers, and what are the equity line or line of credit options for existing homeowners to use to make improvements to their existing home. So stay tuned and we'll be right back. We are joined today by Sean Hadley, branch manager of Cross Country Mortgage. And Sean has been a branch manager loan officer for 18 years, so he really has his finger on the pulse of the mortgage industry. Thanks so much for joining us today, Sean.
Thanks for having me, thanks.
We wanted an expert in this important segment of the industry, so our listeners would benefit from really the state of the union on mortgages. So let's start with what are the most frequently or commonly used loan programs.
The most common overall typically it tends to be conventional financing. It's your very traditional form of lending, just about every lender offers it. Fannie Mae, Freddie Mac are tied to conventional financing, followed by FHA financing would be the next. About 1 in 5 transactions are probably FHA loans. And then VA financing behind that, probably 1 out of every 11 or 12 deals tends to be a VA buyer.
Okay. And then what would you say interest rate wise are the current rates for a 30-year fixed or a 15-year fixed?
Well, rates do vary based on the loan program, down payment, credit score, but prevailing interest rate right now is about 3.875%. Okay. Just under 4%, which is a nice benchmark to be under.
And as a reminder to our listeners, interest rates are based on credit scores.
Yes, absolutely. Credit score is a big determining factor, especially with conventional financing, to a lesser extent with VA and FHA financing as well, but credit score is a big determining factor with interest rates.
And what are rates likely to do over the next 1 to 5 years?
You know, for years we keep saying they're going to go up, and they creep up a little bit and they kind of hit a point and they've come back down. A lot of it has to do with sort of the events happening around the world and politically, but generally speaking, most are expecting interest rates to creep up, probably gradually and then a bit faster. So right now the outlook is that we're in a good period for interest rates and take advantage of it while we can.
Okay, that sounds good. If you were to give any type of key insights to a buyer looking to purchase a home, whether it was their first home or their second or seventh home, what kind of advice would you give in general for searching for a mortgage?
You know, pre-approval, we always talk about pre-approval up front, and most people just think that they need the pre-approval to have that letter to start shopping and put in an offer.
Right.
It's more than an education. The pre-approval sort of period should be used to talk to different lenders, find out what options are available, what loan program might be the best for them. I'd say far too often the first time a buyer's talking to a lender is after they're in love with a house, they're ready to make an offer, and they don't have enough time to do their homework, to make the decisions. Now they're making decisions quickly and tends to build stress, and nobody wants to add stress to an already stressful process.
Right. Shifting gears slightly from home purchases to now homeowners who might be looking to or interested in an equity line or some type of advance on their home to make a major improvement. What does that look like today in the industry?
It's refinancing and pulling cash out of homes is definitely up. Obviously now the values have rebounded and from where they were over the past 10 years, as well as lenders kind of loosening up guidelines to make credit a little bit more attainable. You're seeing both cash out refinances, that is refinancing the existing mortgage into a new first mortgage, or taking a second mortgage or home equity line of credit. You can pretty easily get a refinance to 80% of the value on a first mortgage, and then with home equities, some lenders are going to 90 and even 95%. So home equities is not something where everybody uses the same rules and guidelines, so that does vary quite a bit from lender to lender.
Okay, that sounds great. Well, we really appreciate your time in educating not only buyers but also homeowners and what the options are. It's really an ever-changing industry and ones that we get questions on quite a bit. So we wanted to make sure that we had an expert to answer those. We have provided Sean's information at the bottom of the screen for you if you'd like to reach out to him and have any additional questions, whether they're specific to the mortgage industry or your own personal situation. And we'd like to thank you today for joining us with our real estate video blog. If you have additional questions you'd like us to feature, please reply to this email and we'd be happy to get those to you and or feature it on our next real estate blog. Thanks again and have a blessed day.